Hello, and welcome to Urban Hood Money Talk. It's a fact that we need money to enjoy life and focus on the things that we really like. I'm your co-host, Allie, and I'm here with Mushi Buyan.
Nailed it. Dirty double bottom, but it was a double bottom to boot. Now we can go and climb that entire range back up into these control zones here. So your next target, if you're watching the crosshair synchronization, top of the 1 minute bar is right here at about 41, 44.50. And it's about to nail that. There you go. Next extension, I'm expecting it to fall short of that peak just a little bit. If it goes any higher, probably stop right around 41, 46. The reason it's pausing here, we've got this angular resistance right there. Gosh, I still got to adjust that. And my 10-second chart got away from me a little bit. Let's resize that again. Not much better. All right, there's that range, 41, 46. Look at that, wicked right to it. This candle may bar through that, but it's not likely. I'm expecting a spinner here and maybe a pullback to this angular here. And 50% of that channel would put it right around 41.40. If you're daring, you can take a short there, but it's not without a lot of risk. Because you can get a measured move out of this guy right here. You get a bar, accumulation, or spinner, second bar. Yeah, bad idea to go short there. The idea was you see this 8 period curling towards that 20 period, and you'd expect a bar through it to come down and be bearish and retrace that 50% line. You don't always do that. Risky. So where did this noise come from? Well, if you remember our old trend line here, that's still a valid target all the way up here at 41.55. And we've broken angular resistance. Now we're coming up to resistance on the inverse head and shoulders. So the better idea would be to get into a long position eventually, but you want to see it come across this resistance point and then come back and test it. If it's going to do the healthy thing, that's usually what it would do. Let's see, where about is that key resistance? 41.52. Wait, right to it. Plus a tick right there in that little wick. All right, this is your final pennant before it can push through that resistance point. Let's see if we get anywhere with this. Let's see if I can resize my 1 minute chart here. There we go. Nice, we've cracked through it. Now, ideally, we'd see a return to that 41.52 and some stability in this range. And so we want to see it come out of it and accumulate into a breakout pattern or a continuation pattern, like a nice little pennant or wedge in this area would be good. And the idea is to wait for that pennant to complete and trade the break. Watch for the break out to the bull side or a failure to the bear side. Inverse head and shoulders are typically pretty bullish. However, when they fail big. They run down like a very fast bear flag. That's the question. 4160 is going to be a push. And where is that? Up here. That's the last consolidation zone from yesterday's measured move. Right in that range, right here. So now we've gotten back below that 4152. We're going to play some range here. This will eventually give us a scenario of either a consolidation into a continuation pattern, or it could literally just break over and rip a face off. I mean, that's anybody's game at this point. I'm thinking consolidation and probably extended consolidation. And this could probably go just a little bit after 10 o'clock. And yesterday, I impressed myself yesterday. I did some pretty good trades, even when I was live streaming, I did a couple pretty good ones there. I'm getting better at it, and just a matter of practicing being able to do it while I'm streaming. And the pressure is that, I don't want to take a trade and have a bunch of people follow me into it who might not, be as experienced and then end up losing money on it. It's a little anxiety there. Yesterday I was a little more relaxed. I wasn't really thinking about that. I was just trading the chart. I was a little more focused, and it seemed to help. Today I'm kind of hands off for a little while until I see something I really like. And we're starting to achieve this pennant here. Will probably slope about in this range. And I want to see this accumulate, and then we'll look for a break. And let's see, what's the height of the control candle in this? So we got 41.46 to 41.51. 5-point move on the break. If that broke bullish out of here, take us to about 41.55. 41.55, 41.56, somewhere in that area. Bearish break. We'll run 5 points down from about 41.47. Probably have a target of about 41.42 for a bear target. Whenever you get these pennants and you know they're coming, they still follow that 40-60 rule. They got a 40% chance of failure and a 60% chance of continuation. And the first leg up is going to be about a measured move of the first control bar in it. Then you can expect consolidation around that point, but the measured move portion of this can be the entire trend behind it. So let's get kind of rough, like 41.32 to base, 41.46. Like a $14 move possible out of that. That would take us through beyond that 4160. And here we go with a bearish break. Mind you, there's still a pivot here, so there's still a control zone here. That 4146 is support. And then previous low is also a bit of a support zone, so 4147.25, somewhere in there. Pennants don't always follow a slope rule, like, you know, first control base to first low in the, or lowest low in the first part of the trend or accumulation. There's also this line here to pay attention to. And then with that comes the center line as well. Never forget the center line. Can we get a little bullish scalp in here? We can. Run a break of that center line about 4147.50 to 4149. Be real quick like. Little miniature measured move, if you will. See if it shakes out. So we get trend, accumulation. Trend would take us right up to that upper line. Damn, no go. Ouch. Bull trap. That escalated quickly, didn't it? Again, it's just not the highest quality setup to me. I'd rather look for a break out of the pennant. Well, we did get a bearish break out of the pennant, but it can still be a bear trap. Ends up going to that range anyway. Nice. And I mean, now that we've seen it play out, we get typical double bottom, low one, high one, low two, resistance break, revisit to resistance with this candle here, which is now support, and then extension to target one, top of the control bar, target two, top of the next control bar. We should see a couple more of these that we might be able to take advantage of. All right, just after 10 o'clock too, so we should see something start to kind of roll through into about 10:30. I want to get at least one decent trade in today, but I might not take anything today. This is just going to be expected chop flat range. I mean, it's not totally flat. I guess I could say I misspoke a little bit. It's got some range in it. It's got some predictability for chop. We could certainly be seeing a diamond pattern shake out of this like we were originally planning here. It's still got range expansion. It's certainly fallen to range contraction. and take a time measure. So you got, well, we'll call it straight to 9 o'clock. Breakable point about 10 o'clock. So expect another hour of accumulation into a declining range. Essentially, you take about another hour into here. So see if I can predict this well enough to be worth my weight in salt. Yeah, it might not be that exactly. Maybe here. Let's see if history represents what's today, Wednesday? Tuesday. Geez, man. All the days just sort of mold into one for me anymore. This could actually set us up for a Thursday pattern. Not necessarily from a 1 minute diamond, but there's nothing stopping this inverse head and shoulders from turning into a big old diamond all by itself. Let's see if we can pick up a wolf wave out of this. Well, that shakes out. Bear with me, if you will. Low 1, high 1, low 2, high 2. Let's give this thing some definition. Make it green. Green like money. I always go to body on these. Some people will go to the wick, like go all the way down here to all the way up there. And it's just about perpendicular to our descending wedge. Yeah. If you were respecting an hour-long chart, it might not apply. That looks goofier than all hell. I think I like the 30-minute prediction a little better. That looks about appropriate. Oh, it looks like our diamond might have escalated range a little bit. So we could be setting up a measured move break here. It's starting to trend on the 10-second chart. Key resistance is going to be right here at about 41.52. If that breaks, we get a measured move out of this. I might just grab that. I'll wait and see. Got the makings of a bullish measured move if it gets going here. From the break, that would take us straight to 4160 and a little bit beyond. Cool. Looks like I got back to this chart time just in time. Let's see if it rips. Got another key resistance point right up ahead, about 4155. And I'll either ride the trend or I'll snap a piece of it at a time. That is a huge range for a measured move. Look at this. 4132, 4150. Well, 4152 respectively. $20 range from the break. Let's call that a midline break. So I could even extend to 4170. I'll throw a limit order up there. And then just ride the trend until it ends and hit that exit button. Might get a good trade out of this out of today after all. Looking good. We got through that 4155 zone. Keep on chugging. As long as we hold that 8 period, I'm pretty confident in it. Snap the 8 period, I'll probably break it off. That's just this guy on a 10-second chart. Realistically, you could come down and approach the 20 period and still be okay, but you only get a couple of attempts on the 20 period before it just snaps over and rips your face off. Typically. And there is another key resistance at that 4160 mark. Just about there. Blasting through that. Careful though, sometimes you get a tweezer out of that. Sometimes it pays to be picky. Okay, 4160 is now support. You can give or take a tick or two. Tested the 8 period. This better hold. And I think we might pull back here. Drop that off. Not a bad little gig, 4250. I'd expect a little pullback here and some accumulation, but it could just snap that 20 period. And let's compare our measured move here. 4162 would have been about the top of that noise. Not quite a whole measured move yet. It can accumulate and push on to the next target here, but really cool to see a pullback first. About 4153 would be a great pullback. Actually, 4152, sorry. About half of that move. It's a known pivot too. Then again, a nice little trade. If that would have been an ES contract, I would have been dancing. I don't know if you guys caught that ES trade I traded yesterday on that bearish measured move, but capped about $800 out of that one. Probably one of my best best single ES trades. I think my next biggest one I had was like 620 or something like that. It was just a matter of being picky. I was waiting for the right setup, and yesterday's bearish measure move, I mean, that was just textbook, man. Couldn't have asked for better. It was just simple. I mean, there was your open, dropped down, accumulated, broke over, right about noon, 1 o'clock. Made the exact same move it did here, right below. Bam. Just crushed it. All right, so now we've got a nice little kick and trend out of this thing. Let me resize the 1 minute chart again. That's all grainy now. What the heck is up with that? Tap it on the 1 minute 8 period here. It's actually a good thing. Could set up a secondary measured move out of this, but can also break over bearish and retrace right back to center. Go as far as 41.45. So it'd be a little bit risky getting in either direction here. Wait for a break. This is weird. Why do I have two different moving averages here on the 1 minute chart? I don't remember adding that. Don't tell me I got an EMA and a SMA. Simple moving averages, okay. Weighted moving average. Interesting. It's a 14 period. Why? Oh, why would I do that? Whatever. I'm gonna leave it there. It doesn't make a bit of difference. I mean, it's just kind of. I don't know. Not really one that matters much, but we'll see. Maybe it will. Sometimes I don't know what I'm doing and I just throw something on the chart and forget about it. All right, we might get a bearish break here. Let's see what we do. And you can kind of set your target zones when you're getting a retrace after a measured move like that. You can go 50% of the channel or 50% of the trend. So if you got in on that bearish break, you can certainly target that, but weigh it out in quarters too. So like if you start looking at points of control in that trend, you can kind of plot the 25% retracement too. When you get down to towards the bottom though, you want to be more of a skewed position, about a 33%. It's typically where the bears are going to tire on this. So that would actually be up here about 41, 49. Yeah, we'll give some color to this one. What in the world? Give me a color. Fine. There we go. Just so we can kind of tell the difference in case we get all zoomed in or skewed on our chart a little bit. That's one decent trade for the day. Now, if that was, say, an ES contract, that would have been about 420 bucks. Let's do a factor of 10 for one MES versus one ES. There we go, a little double bottom right on that pivot zone. Cool, right? Let's zoom in on that bad boy. So we got R1. We just teased. If we don't break R1, we don't get in it. 8 period just cruised on top of the 20 period. There's your R1 break. Target 1 achieved. Target 2, 41.58. Maybe a wick to 41.59. And extension, of course, is back up to previous angular support. And also we have a crossing down of angular resistance as well. There's your extension target right there. A break here. We can resume this trend. First we got to break the previous high, and I'm talking body high, not wick high. Let's round it, 41.61. We're going to continue a bullish move here. We got to do that. At the same time, don't forget to consider this just another rising wedge. Oh, and we know what rising wedges love to do. They love to return to the midpoint or the 50% retracement. So if this snaps off a bearish break, it'll be very sudden. Let's look at our other time frames though. We've got the IHS. We're just outside of the resistance. That's fine. Came up to the next accumulation zone. Good deal. So we can shake a range, accumulate the rest of this accumulation zone, and basically just retrace this entire bit of price action right here from back to our previous resistance, which is now support at 41.52. We could easily nail that as a quick bear target on breakover, and then come back up in the trend and ride that to the next pivot. It's a very simple fact that can happen. Be respectful of the trend and compare to our wolf wave that we set up here. So likely if we see this accumulation take shape, equal span of time roughly, puts us out here, and as that wolf wave slope is rising, so is the target. So if we accumulate here and we break out towards the middle of the day, about 12:15, 12:30, 12:45, somewhere in that neighborhood, watch for that extension to come through that 41.62 resistance point. And then our target, first target would be about 41.72. So you can get a quick $10 scalp out of that on the break. You can trade the range within that break, whatever you want to do. Any time frame is fair game as long as you see a good setup and a good break. Go for it. The idea is the wolf wave is a moving resistance point. You'll likely at least see a pause there. On occasion, you'll see them just get completely snapped through. I mean, you've got a fairly vertical trend here that we can retrace on the break after accumulation. It can certainly run right through out of that bullish wolf wave pattern and attack that next pivot zone, about 41.78 right here. Not a problem. Seen it many times. And as a matter of fact, if you do extend or change the slope angle to match that wick right here from this candle at, what is that, 4:15 yesterday? No, 4:15 in the morning, sorry. Run the top of that wick, gives us a little more leeway to get a little bit more of that vertical trend retrace possible. But never look a gift horse in the mouth. If this thing breaks that support point, which was previous resistance, this just turns from a inverse head and shoulders into the old pop and drop bear flag. So always be aware of your potential bear targets, and we talked about those early in the stream. I'll revisit them real quick. So we know pretty simple, if it breaks that range, that 41.52 area, sure, we can snap right down to about 41.32. Pretty easy, right? Break that, next control zone down here at 41.08. The small control range zone down to 41.01. And my goodness, if we snap 4100, we got all this to retrace. Nasty business that. So we'll see what we end up with, but we have both arguments possible today. And in all likelihood, everything is going to try to stay in range up until Friday when that Jackson Hole thing comes out. And old Jay Powell gets up to the mic. We're going to see some volatility towards the end of the week there. We got lots of things to pay attention to, lots of range to pay attention to, and just a plethora of different targets, pivots, and ranges to trade. All right, here we are visiting 41.52 again as I speak, as I live and breathe. That was that red line. That's that snap over 50% retracement line. Look at that. Might get one more quick trade between now and about 10:40. I'll hang around. And after my stream, I'm going to certainly do my best to also be a lot more visible in the chats. And that's across the board between everything. Large caps, penny stocks, you name it. If it moves, I love scalping it. I'll even go tag a meme stock every now and then. You know, if I see an opportune setup for, gosh, AMC or GameStop or any of that garbage, you know, I'll go scalp it if I see something setting up. Those are both things I would rather sell options on, but, you know, potato, potato. All right. And we can be slightly below that 41.52 area where we saw the previous resistance on that inverse head and shoulders. We can play within range of that for quite a while. And realistically, as long as we stay within the peak control of the last high that achieved that resistance, we're okay. And that's anywhere in this control candle zone here, this 4:15 a.m. candle. And that's as low as, what, 41.50. And give or take a tick or two, you know, you don't panic if it snaps it. And like 41.53 and 50 cents ish, somewhere in that neighborhood. Just basing it on this control candle here. In fact, ideally, I'd like to see accumulation in that range because it'll give us a better chance of resuming a breakout from a reversal. So. No way. Is this setting up a measured move? It is. There's your break. Watch the pivot, and target will be the base right down to, yeah, give me that line. There we go. About 41.46. Yeah, it is kind of looking more like a bear flag. You are correct. Ironclad, are you in the stream here? That is a risky scalp. One of those you better be nimble situations. It might break over. It's getting weaker. My voice is getting weaker. Yeah, that's going to break over. No go. I'll wait for something better. When they can't quite get through R1, it's already over. Not to say it can't make me look like an idiot and come back and break it anyway, but better I look like the idiot than you do. Nailed that target anyway. Wow. Sometimes you can play 10-second double bottom bounce pretty well. Sometimes you can't. That was a very weak one to begin with, so. What it can do, though, is it can give us another measured move. Yeah, if that breaks support, if you're looking at the synchronized crosshairs here, break back through support 41.45, get a quick $5 move out of that to about 41.40 down here. As weak as that was, there it went. Target 1, target 2, nailed the extension almost. Your rejection, you can get the bear side of this if it cracks that 8 period. There's your reject point right there. Let's see if we can scalp that down. I'll just hit it with a market order. This will be some rough chop. It's not great to sit here and try to scalp this, but get a quick return. Why not? Or like I said, even if you just want to sharpen your skills in paper trade these are great. Just practicing that quick little double bottom reaction on the breakover for a bearish trend. And the dominant trend is still bearish. If this snaps support, we'll get a quick measured move, a quick $5 banger out of it. Right over. All right, there's the first support break. Let's see if the second support, just this guy here. I'm watching that 8 period pretty cleanly. We start seeing bars get across that 8 period, just out. No use risking it. And that bar just went through it. Let me see what this one closes as. Hammer here would be a death sentence for a short position. Yeah, there's a hammer. Yeah, goodbye. Ideally, when you get in those, you put a limit order at the first break down here. Hey, what did I lose back here? 375. Yeah, most of it back. And this can continue rolling, and it will. Nice. If you want to build your speed, man, these are great for that. Let's see if I can do one without talking much. And see, look, we got short-term trend, low 1, high 1, low 2. Back to resistance. This itself can be a little bullish double bottom. And its target is right under that pivot, 41.48. And this one, although it's a shorter time frame, it's much more defined than that weak one I got into on the bull side last time. I missed the entry, but see, it's returned to support. This is the tricky part. You can hold this and go for that target one. Be nimble to get out of it before it breaks over, because our trend is still pretty bearish here. And although we're starting to see a little 1-minute double bottom here, the likelihood of it getting out of that angular resistance that's there pretty low. It may skew it up here a little bit. Breaking this threshold here, pretty low chance, but if it does, we know where the target is, right here, 41.52. And we just broke R1 on the 1 minute. Ideally, we get a pullback just under it one more time. I'll risk it. Oh man, missed me by 1 tick. I'm starting to run out of momentum here though too. This might just end up breaking over. In fact, it's got a really good chance of breaking over. No, it's going to break over. The question, do we play the reverse card? That can be fun, actually. I'm looking at my 1 minute chart with my eyeballs here, even though my hand's hovering over this button. I'm looking at that angular resistance, looking at my chops, going, okay, bull target, I can flip it to a bear target or a bear trade in an instant with this button. This is the third attempt on that angular resistance, though, so break above can eat me pretty quick. So I'll always be ready to jump out of that. And if we break the wick of that previous high, I am out. Nice. Keep going. Get that 20 period. Grr, hit the pivot and bounced. But you can sit here and if you got the time, I would not recommend doing this sort of thing with real cash. I would definitely go for a paper trading scenario if you're not skilled in this. But scalping these little quick patterns, I mean, if nothing else, it'll hone your skills and you'll learn. Every time you make a mistake, you're going to learn anyway, but you'll learn really fast how to take advantage of these patterns. I think I'm going to ride that candle to the pivot, see if it breaks it. Give it a chance to close a bar through that pivot. There we go. We got a measured move. We'll go probably to the next low. 41.44 is going to be a good target. Come on, take over. There's that little flash of green I didn't want to see. Next candle body better stay below the top of that doji or that hammer. Otherwise, I can just, yep, I'm done. Quick little, 20 bucks. Wrote it up for $13.75, wrote it down for $21.25, all on a 10-second chart. And I'm better skilled for it. So, I mean, like I said, practice. That's what that 10-second chart is awesome for. You get that recognition, and you start to make really good practice out of it. You'll be able to pick up on all these on the 1 minute chart. You'll be able to pick up all of them on the 5 minute chart, 15-minute chart, 30-minute chart, daily chart. Doesn't matter. All these price action setups are the same. Hone your skills. I'm going to call it a day, guys. I got to get some lunch real quick, and then I've got an appointment to speak to some people at about 11:20.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.